So I think Bitcoin, if you look at it, it's money, but it's the store of value element of money. And obviously, I happen to believe Bitcoin is by far the best form of property, and it's obviously the best form of digital property. And I happen to believe that the best way to think of it is a capital asset. So I view it as digital capital. It's going to reshape the capital markets. Well, we're just going to replace the currency of your nation, whether it's the dollar, the euro, or the yen, or the CNY. We're going to replace it with Bitcoin. Even better, you issue convertible debt, convertible to your equity, and you buy Bitcoin because that allows you to recapitalize with an appreciating asset.
The global financial arena is experiencing a significant shift as central banks worldwide alter their strategies for managing and diversifying foreign exchange reserves. This transition marks a gradual decline in the long-standing dominance of the US dollar, accompanied by the rise of alternative reserve currencies and changing geopolitical dynamics. Are these problems fixable? MichaelSaylor, the co-founder and executive chairman of MicroStrategy, holds the view that Bitcoin's rise as a digital asset presents a fresh opportunity for investment, especially appealing to today's digitally adept investors. Clarifying misconceptions about Bitcoin's intentions, Saylor notes that worries regarding its potential to supplant traditional currencies often stem from a misunderstanding of its actual purpose. The greenback remains the world's reserve currency, a safe haven, and a port in every economic storm. The dollar's dominance looks unshakable. It makes up about 60% of the world's foreign exchange reserves, way ahead of the second-placed euro, which has only 20%. However, its unchallenged reign might be approaching an end. The International Monetary Fund, IMF, reports a steady decline in the dollar's share of global foreign exchange reserves, underscoring a growing appetite for alternatives. In terms of practical advice, Saylor suggests that smaller or mid-sized countries with the capacity to print their own currency could consider investing in Bitcoin as a strategic move. Everyone should learn to accept digital currencies, such as Bitcoin, as a viable alternative to fiat currency, says the former head of digital adoption at Khazanah National Berhad. Let's delve into what this shift in the global financial landscape means, particularly in the context of MichaelSaylor's perspective on Bitcoin as a complementary asset within diversified investment portfolios. By subscribing to our channel and enabling notifications, you can stay informed about timely updates and insights.
So I think Bitcoin, if you look at it, it's money, but it's the store of value element of money. I think that strong governments will continue to issue currency. They will designate it legal tender. When the country collapses, like El Salvador after the Civil War, or Nigeria, or parts of Africa, when your country or nation state's no longer functional, you won't have a currency. You will adopt somebody else's currency, whether it's the CFA or the euro or the CNY or the USD. But that's okay. And I think that the right way to think about the world going forward is every intelligent person, every reasonable person is going to adopt the local currency as a medium of exchange. They're going to adopt the world reserve currency, as their mid-level, unit of account. That's probably the dollar, unless you're in the Chinese sphere of influence. It might be the CNY. And then they're going to, if they're a conventional investor, a traditional investor, and that's like 99% of the money in the world, they're going to use the S&P index as a store of value, or they're going to have high quality, desirable real estate in the Hamptons or New York or Miami, or they're going to have their home, or they're going to have, probably it's that. Even most wealthy people don't even think bonds are a store of value. They generally think it's, JP Morgan's survey of family offices says 45% of their money's in alternative assets. Right. And then the new investors, the 21st century digital investor, will look and they'll add Bitcoin into that mix. And, obviously, I happen to believe Bitcoin is by far the best form of property. And it's obviously the best form of digital property. And I happen to believe that the best way to think of it is a capital asset. So I view it as digital capital. It's going to reshape the capital markets. And why is it a little bit better than property? If I say to you, well, do you like Bitcoin? And you think, oh, Bitcoin, the digital currency? Well, then you might very well answer like, a certain politician answered a few years ago, like, no, I like the dollar better. okay, because you thought the Bitcoin was competing with the dollar and you thought someone was asking you whether we're going to replace the dollar with Bitcoin. So if you think it's digital currency and you think the euro, the yen, the dollar are currency, then the implication is, well, we're just going to replace the currency of your nation, whether it's the dollar, the euro, or the yen, or the CNY. We're going to replace it with Bitcoin. Now you end up with the entire establishment, every establishment politician, most bankers, most traditional economists pushing back and resisting it. And the politicians will resist it because nobody wants to collapse the dollar. It's a source of American strength. It's probably worth trillions of dollars a year to the US. So obviously, we know why we like that if you're an American politician. On the other hand, if you're a classically trained economist, you say, oh, well, the dollar, it needs to be stable and we need to be able to inflate the currency supply and everything's priced in dollars. And so that's a reason for a classical economist to dislike it and criticize it. My advice to an aggressive small country, if you're a small mid-sized country and you can print your own currency, you either print the currency to buy Bitcoin or you issue sovereign debt and swap it right into Bitcoin immediately, right? You can borrow money cheap and you loan it to Bitcoin at 24% return or better, right? So
Global chaos and sanctions on Russia forced many nations to make payments in local currencies, and the dollar was no longer the only option for global transactions. On the other hand, gold in the last 2 to 3 years has seen an unprecedented rise. According to MichaelSaylor, the concept of gold as a reliable asset for reserves or investments is flawed and outdated. Furthermore, Saylor highlights gold's inherent inflationary nature, citing its average 2% inflation rate as a significant drawback. In contrast, Bitcoin addresses these shortcomings by offering a decentralized, inflation-resistant alternative to gold. Demand from central banks for gold reserves surged to 23% of total demand, up from an average of 10% over a 10-year period. Let's shift our focus to a video.
I think gold's a waste of time. It's dead money. Maybe it's virtue signaling if you're buying it. Gold broke down, as a reserve asset before World War One. And, on the eve of World War One, when all these nations declared war, every single one of them went off the gold standard. And so the myth, there's a myth of a gold standard that people like to cling to, but I've read like 3,000 years of economic history.
Mm-hmm.
And as far as I can see, it was never as good as anybody ever thought it was. It's always been defective. The real elephant in the room here is two things. Gold doesn't work in time, and gold doesn't work in space. If you look at using gold as a property asset, a reserve asset, a treasury asset in space, there's no way for 1,000 different organizations to custody their gold and swap it every week and settle it. You can't settle every day. You can't settle every week. You can't even custody it, right? So gold centralizes. I mean, how is it possible that, the United States could seize the Russians' gold,
Mm-hmm.
right? Because, the gold standard, collapse, or the faux gold standard after Bretton Woods collapsed, I guess, when the French wanted their gold back. But, if you wanted it to be an effective treasury asset in space, you would need to allow peer-to-peer settlement. And that means and when I talk about peers, I'm just going to talk about Apple, Google, JP Morgan, Citigroup, Bank of Japan, Bank of Switzerland. How about the 10,000 biggest economic entities in the world? They all need to be able to custody and swap it every month for it to be stable as a settlement network. And of course, gold isn't that. You can't sell it every day. It doesn't move fast enough, and so that's why it fails versus Bitcoin. With Bitcoin, you could have 10,000 different custodians, and they could be settling $100 million between each one, or $1 billion between each one every day, and the network will hold that kind of load. So gold doesn't work in space, but it also doesn't work in time. Gold has under best of circumstances, a 2% inflation rate. That's steady state. And a 2% inflation rate of gold means a half-life of 30 years, which means that 87 or 88% of your economic wealth is dissipated over 100 years, right? And if you look at Spain in the 16th century, and the 100 years after they discovered America, and they looted the Aztecs and the Incas and everybody else of their gold. They also created 500% inflation, right? And so they actually hyperinflated their currency in gold coin, collapsed their own empire. And so, and the stories are the same about Julius Caesar when he went off into Gaul and he conquered Gaul. He brought back so much gold, he created hyperinflation in Rome, and that was part of the reason for the civil wars that followed. And you know what they did to Julius Caesar when he came back?
Yeah.
So gold is inflationary. The difference between 2% and 0% is the difference between a half-life of 30 years and a half-life of a million billion years,
Yeah.
right? And so there you go. Bitcoin is the fix on gold. Gold itself is just a defective treasury asset because it's too slow and it's too inflationary.
According to the International Monetary Fund, IMF, the dollar's share as global reserve was 62% in 2010 and 59% in 2020 and 58.41% in 2023. While Bitcoin spot exchange-traded funds continued to attract investor interest on May 14th, with total net inflows into these funds reached $100.5 million, highlighting ongoing demand for direct exposure to Bitcoin. As a country, state, company, or society, where do you want to store your wealth? Your insights are highly appreciated. Don't hesitate to share them in the comments section. If you found this content beneficial, kindly give it a thumbs up and be sure to subscribe for regular updates. We're grateful to have you on this journey with us.